Hi everyone, today let's talk about Tesla, then we'll talk quickly about Pinterest earnings, then we'll talk about the Treasury borrowing ungodly amounts of money once again. Then of course we'll look at the calendars as well as the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Tesla shares dropped 5% once again, with Panasonic warning that they are slowing production of batteries. This is stroking fears of sluggish demand for electric vehicles, which is already down quite a bit. Demand has been starting to wane since they stopped getting the EV tax credits. These are also some pretty expensive vehicles relative to some of the others available. They also mentioned the Cybertruck, saying that they dug their own grave and they shouldn't expect the Cybertruck to be profitable for a year to 18 months. In terms of a cash flow contributor. And so far, the stock is down 18% since that earnings call. Everything seems to be pointing to the downside here for Tesla, and people are pretty nervous on the stock. In terms of price targets, they're talking about $150 per share, which would be down another $40 or so from current prices. Overall, they're taking a pretty big hit right now. Moving over to Pinterest, on the other hand, they are doing very well. Reported a 11% increase in sales, topping estimates. Expenses rose 2% from a year prior. Revenues beat pretty well. Earnings per share beat pretty well. Like we said, 11% to the upside. Everything is going pretty well. And in terms of companies that depend on ads for revenue, it seems like Pinterest and Meta are doing fairly well on this, while Google seems to be on the struggling side. It's good to see earnings from a smaller company doing a little bit better. Moving over to the federal government, they are borrowing obscene amounts of money once again. They're expecting to borrow $776 billion in the final 3 months of the year, an absolutely colossal amount of money. And then once again, they're going to turn around and do the exact same thing and borrow $618 billion between January and March of next year. An absolutely colossal amount of money. They just spend so fast. And I'm not even sure exactly what they're doing with all of it, probably sending it over to Ukraine at this point. And they announced for the fiscal year of 2023, they're expecting a $1.7 trillion deficit. They just cannot stop spending money on all kinds of stuff. And the question becomes, who exactly is buying all of this debt? The public holds quite a bit of it. $1.01 trillion is held by private owners, meaning basically the population lending the federal government money, which creates this really interesting cycle where we loan money to the government, they spend it, give it back to people, who then pays taxes on it, which then goes back to the government, and they spend it, and this cycle continues around and around. But right now they are spending way above their means, and there is no end in sight currently. They also mention here the department expects to maintain a $750 billion cash balance for both quarters, so they are maintaining quite a bit of cash in all of the borrowing, which doesn't really seem to make too much sense. And the question is, what interest rate are they getting on all of that cash, and what interest rate are they paying on it? Either way, the government is spending way too much money. Moving over to the calendars, there was nothing on there for today. Tomorrow we have CPI and GDP for the Eurozone. We also have the consumer confidence here at 10 o'clock. That's going to be the big one for tomorrow. And then don't forget, if you do hold anything overnight tomorrow, we do have ADP non-farms in the morning. And then a little bit later in the day, we have ISM manufacturing JOLTS report. But that's at 10 o'clock. You could exit your positions before that time. And then don't forget FOMC statement and interest rate decision in the afternoon on Wednesday. Moving over to earnings for today, McDonald's crushed it on both top and bottom lines. Welltower also did well. Simon Property missed on earnings, beat on revenues. They continue to do very well despite being invested heavily in a dying industry, in my opinion. Pretty amazing how well they're doing. They also focus on a lot of luxury brands, which seems to be doing okay. Tomorrow we got Pfizer, AMD, AMZN, Caterpillar, Marathon Petroleum, always interesting. And then on Wednesday, we have Qualcomm going to be the heavy hitter, as well as PayPal, always interesting. Moving over to Max Payne, put wall at 410, bottom of the calls still sitting in that 407 to 409 range. Did make a little bit of ground to the upside, 415 on the day, 420 as Max Payne, put call ratio very high at 2.58 still, and you can see all those puts in the market. Overall still seems okay. Total options just over 1 million. Moving over to the charts, starting off with the S&Ps, pretty good day, up 1.2%. Didn't really expect it to be an up day after this bigger down move, closed basically on the lows, but we ended up gapping up, rallying, hit the trend line here. Coming off of that 410.54 level, bounced in the pre-market, pretty much rallied up after hitting the 55 EMA on the hourly chart, pulled back from that level. You can see the 21 EMA on the hourly chart held throughout the day and then ended up rallying into the close. Looks pretty good. Next level for me, 416.95. Above that trend line would also be nice. Get above that 420 area, rally up to 421.85. Still got the 144 EMA on the hourly chart up here in that same region. Probably would get some kind of rejection from there, but not too bad on the shorter time frames. Go ahead and extend out that trend line here. You can see it's sitting right at the 9 EMA in that same area, right around that 421 zone. And that seems like the price target, at least for the shorter term pullback. If it breaks through there, then we could look for some higher ranges, but right now that's what it looks like in my opinion. Moving over to the NASDAQ on the hourly chart, similar thesis, gapped up, rallied. 21 EMA held on the hourly chart, looked good. 346.87 ended up holding. We stopped right at this trend line, and you can see that is the trend line here from the lows in July, lows once again in August, lows here in September, and we are now back testing that level. If we can get above it, rally up to 353.24, that would be nice. That is my next level. Still have the 144 EMA sitting at 354.68, very close to that 9 EMA here on the daily chart as well. But momentum, step towards bullish on the daily chart, RSI showing some pickup. Right into that range would make sense to me. But you got to get above this trend line first, then push up about another 1.5% or so. Moving over to the Russell and the Dow, the Russell really did not do much of anything. It was slightly bullish after the gap up, but then it chopped sideways right on this trend. It is still holding up fairly well considering that 164 level broke. I kind of thought that it would move through this area pretty quickly once that broke, but so far it continues to hold up fairly well, is just barely above that trend line. As long as that continues to hold, you could trade off it. We're still below all the EMAs and SMAs on the 4-hour chart, but we are starting to tick towards bullish momentum. RSI showing a little bit of strength in this zone. Didn't get above any of the levels I was watching, but still closed below 163 where I had the option. Still okay there. And then looking at the Dow, much more bullish, gapped up, rallied basically straight through the session, right up to that next level at 329.40, above the 21 EMA here on the 4-hour chart. Bullish momentum, RSI almost back into bullish. Looks like a very powerful bounce off of that trend line. Looks pretty good. You want to see it get above that level. You could trade off of that to the next one at 335.91. That would be a really nice move. Basically the inverse of this move where we broke, fell right to that next section. If you get a breakout, retest, continuation to that level, that would be a great trade and a nice little profit. Moving over to Apple and Tesla. Apple also had a nice bullish day. 9 EMA on the 4-hour chart held. Bullish momentum, got right up to that next level at 170.90. Needs to get above that level, hold and rally up to the next one. Right now we're at resistance, technically in a downtrend, which is not where you want to be. You can see last time we had something like this, big bullish move, tested the 21, broke down really significantly, made a much lower low. Technically, this is still a much lower high, and we are below this previous dip low, so this could be a continuation move here. You do have to be careful, but if it rallies up, holds this level, and looks to that next one, certainly possible as well. Tesla, on the other hand, talked about it, absolute dumpster fire, continues to sell off. Next level for me down at 188.50. Also have trend support down around 181. And at this point, there is no structural change. Obviously, he looks very bearish momentum, super oversold, and looks like it's going lower. Moving over to the best performing mega caps. No surprise here, the best performing in earnings performed the best on the day. Amazon up nearly 4%, hit that 55 EMA, bullish momentum, bullish RSI, looks like it can push through that zone, looks good. Microsoft, similar move, 2.25%, but still bullish momentum, bullish RSI. Next level for me, 344.87. Above that, I have 352.07. And then above this level here for Amazon is 138.49. I think both of these could push through that level coming off of good earnings. Moving over to staples and discretionary. Staples established a higher low from this previous bottom. It is slightly below this midpoint here, but we got back into this range. Looks okay. We're above the short-term EMAs. Momentum looks good. Strong bullish push on the day. Obviously still has some overhead resistance, but staples hanging in there, looks much better than it has, and continues to put in a solid base, potentially looking for a rally. Discretionaries, similar movement here. got above the 21 EMA, starting to disconnect from that Tesla down move, which is good. Discretionary showing a little bit of strength, bullish momentum. RSI not quite there yet, but it looks okay, especially after this down move. Looks very similar to Tesla, but Tesla continued to sell off here today. Discretionary showing a little bit of strength. 153.90 is the next level for me, as long as that 148.89 holds. Moving over to financials and transports, financials have been selling off pretty strongly from around that 33.85 area down to this most recent 31.50 area. Since bounced right up to the 21 EMA at this previous bottom here. Want to see it get above this consolidation, which would be around that 32.30 area. Get above trend resistance at 32.50. Could potentially be a bottom after this pretty significant down move. We actually topped out around that 35.70 area. Overall, not terrible. Nice little bounce on financials. Transports actually showing some signs of life. This has been falling all the way since 267.50. Now we're down in this 215 range. Momentum turned bullish for the first time in a couple of weeks. Got above 213.27. Want to see it hold that level as a bottom and then start to break higher into this previous resistance. Most traded zone is up around 230. Could be a possible turning point. Doesn't mean it's going to happen in one go or a V-shaped bottom or anything like that, but it is a start. Maybe we rally up, retest, take out that midpoint, rally up higher. Could be a nice clean move. Overall, nice to see a little bit of strength across several different sectors. Moving over to breadth, what a bounce. So we got the 50-day average coming off of that 1050 level, touched it, bounced. We now have a higher low. As long as we get a little bit of follow through here, that would be great. 200-day average, big bullish candle, fully engulfed the previous one. Momentum ticking towards bullish for the first time on the 200-day average since this really significant down move from that 43.50 all the way down to 24.25. Massive down move on breadth. Now we're showing some signs of life. I would expect at least one more day of bullishness off of this, and then we'll see where we land going into the FOMC on Wednesday. Moving over to yields, they really did not do much today. Slight bullish day, but nothing to rattle any cages. We're right in the same range on the 2-year. 10-year continues to chop sideways since around 18 October. As long as this doesn't get above 5%, in my opinion, I think we're going to be okay, at least in the short term. We'll see what the FOMC says on Wednesday. That's obviously going to move yields around quite a bit, but right now it seems we've paused waiting for that announcement. Moving over to the dollar, got the dollar selling off pretty strongly today, probably because the federal government is going to borrow a massive amount of money once again over the next 6 months. Typically not a great indicator for the dollar, but then we'll see what happens once that money has been sucked up by the government, see if the dollar continues to fall here. But this is a big bearish candle, down almost 0.5% coming off of a test of that 106.84 level, which did happen on Thursday. We tested it back here at the beginning of October as well, couldn't quite get there in this middle consolidation. Now we're breaking down. You want to see it get below 105.50. That could be a pretty bullish indicator for equities. Bearish momentum. RSI below the SMA. Want to see that break below 50. See the dollar start to weaken quite a bit, and that should drive equities quite a bit higher in my opinion. Moving over to the volatility indices, MOVE index rallied slightly, didn't do a whole lot, nothing really worth mentioning. Came off the 21, rallied up a little bit. VIX sold off throughout the session, couldn't get above 22.50. Again, I continue to watch this trend line up here around 24.50. I still think we're probably going to get there at some point, whether it's a quick shot, wick high, before we get an official turning point. But right now, this structure is still quite bullish. We continue to trend higher. Even if we didn't make a new high on this most recent pullback, we could still see a bounce off of that 55 EMA just like we did last time. Hold that level, rally up, make a new high, still certainly possible. Structure still mostly bullish. In terms of my accounts, you can see how I'm positioned. I did make a few dollars on the day. That 163 call on the IWM ended up out of the money. It sold off a little bit after hours, so I should get most of the profits there. Not too bad. Qs, I ended up picking up my core position once again off this rally. Should have held it over the weekend. That was a little bit of a mistake there. I did get a little bit spooked, and I still have these puts here, which continue to be a pretty profitable position. I do have calls for tomorrow, which I did get some profits on to help cover for these losses. I still have another $2.48 at least here in potential profits on that position for tomorrow. Everything does look a little bit bullish in the short term, which is good. I still have these puts at 347. I still have about $5 potential credit there, which will be nice. Then I have calls for 4 days from now at 352. Might need to roll those out a little bit. If we end up below 350 for tomorrow, that'll be fine. Let these calls go, and then I can just have that one covered position. Overall, slightly bullish. Let these calls roll off, and then we'll see what I do here in the IWM. IWM still looks weak, but the NASDAQ looks okay, and so does the S&Ps. Let me know down in the comment section what you think of Tesla. Are they going to continue to sell off or not? Also, what do you think about government spending? Should they just continue to spend forever and continue to build this deficit into forever? And does any of it really matter? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.